What's going on, guys? It's GBP baby. Welcome to another backtesting video, and today we're going to be looking at GBP JPY. This is a pair that I don't think I've ever actually traded. I don't think I've actually traded it before, so it's going to be interesting. We're going to be starting with the Monday the 11th of September, and yeah, hopefully we can work through the week. It is looking all right in terms of analysis. We should be able to find some good setups. I'm going to start straight from the Sunday. And yeah, we'll just get straight into things. You know the drill. Hope everyone's doing well. And yeah. And hello to all my new subscribers. But this week, this week in the charts in general, it was quite consolidated for most of it. CPI on Wednesday and Thursday. Wednesday made Thursday a lot more active, but then the Friday I was anticipating a lot more movement. However, we never really got that, which isn't ideal. But yeah, let's just take a look. So this is all you can see, a lot of chop action here. Not very ideal. I'm not going to really analyze that. But this is where we have our first expansion. So we can have a look here. We have a low, a high, a low, a low. So we do have a breaker block here. That I'm going to draw out like so. I think, let me see, that's supposed to be. Wait a minute. Bear with me, guys. I'm figuring this out. Is that right? Yeah, okay, cool. So we have a breaker block here. We don't actually return down to this breaker block until the Tuesday, which is interesting. I'll show you that now. So here's Tuesday. Oh, we don't even tap it. Okay, my bad. Let's just get straight into it. So you actually have we have breakers within breakers. We have this breaker here, which we do trade to here on this down wick, but we're going to look at this breaker more specifically because this is more short term and more ideal if we were to be. I don't know why my charts are doing that. I never used to do that. That's interesting. Anyway, we have a breaker high, breaker block. And why? Low, high, lower, low, because we trade into that. Where do we trade to? 50% level. This is going to annoy me. There we go. The outline. So I'm going to draw out the 50% level, which is 769. And you can see we respect that. Now, the amount of chop there is here, the likelihood of me getting in on this move is quite low, but in general this would be where you would want to enter, because obviously there's a lot of chop before this, but in terms of a entry in general, this is the kind of entry model you'd want to look at. Low, high, lower, low, then we break higher. As soon as this candle closes, we can buy here and put a stop loss below here. You can see a fair value gap is created here, and this would then act as the breakaway gap. So we can make this blue and we can call that a breakaway gap. And I'm also going to just change this to blue, change this line into blue as well, and I'm going to just make it thinner. There we go. Cool, and then we can expand higher. As we take out this swing high here, any candle that dips down back into it, such as this one and this one, are all buys as well. So we can put a blue buy here and here. And look at this immediate rebalance that we have going on right here. That's interesting. We can make that red. Oh, I know why. So we can call that an immediate rebalance. Right there. I'll just send that to the right. And then as we take out this swing high, you can see how we run on stops, and then we pull back down and fill this fair value gap before finding support and moving on higher. So we can put buy side liquidity here. This would also, you could, no, never mind. And then we have a fair value gap here, which gets filled. When a fair value gap gets filled like that, I then anticipate price to want to move away from it. So this is nice to see. as it shows, you know, support for, okay, this is a fairly traded range. Now I don't expect price to want to come back down below there, and you can see it doesn't. It continues to expand much higher. So these are all signatures in price action that you want to be looking for. You can see we trade back down into this bullish order block here. Right, center, black. And you can see how we come down to that 50% level again and then expand higher. Then technically you could see this as a breaker. Why? Because this, we've got a low, a high, a low, a low, and then once we break higher, we can use this candle and drag it out, and price should come back down to it. And we'll see over here, that's exactly what happens. We come and touch it one more time, offering us a second entry. So we can make that a breaker as well. And it's interesting because it's not a direct breaker, but it's acting as a breaker. So that's interesting price action to see. And again, that gives us opportunity to want to be buying here. And then where we'd be aiming for, we've got some beautiful relative equal highs here, some beautiful buy side liquidity, so we'd anticipate that to get taken, and that's what happens. Buy side, and I'm also going to put / relative equal highs. And then as soon as that gets grabbed, I'd then take off my position. Oh. And then where would I take off half my position? At 50%, which would probably be above this buy side resting here anyway. So let's take off half the position here. Pay the trader. And then I'd run up into here. And now you can see we do come back down and we trade back into this wick. So we have another consolidation after we take out this. Swing high here. Run on stops as anticipated. Where's the run on stops? Swing low. So I can put run on stops. Run on sell stops. Let's make that red because it's sell side. So we anticipate that to happen. And then you can see we expand back higher. This wick acts as support, and we trace the 50% of that. Wicks are gaps too. You're probably thinking, why is my Fibonacci number so thick? That's because I was using my laptop the other day, and I can't see. I'm pretty much blind at this point. It's craziness. So we trade back down into this wick, and then we expand. We have a breaker, low, high, low, low, and we break. So that actually means that this little wick here is a breaker, and you can see we trade into that there, which would be a buy in itself. Because remember, we anticipate a run on stops, which is what we have because we took out this high. So we take out buy side, have a run on stops, run on sell stops, dip down into this wick, which is also a fair value gap. Remember, wicks are gaps too. We support that 50% level. We then break higher, and as we break higher, we then return back down into this wick high as well. So that's nice to see. And then we create a fair value gap after that, which would then act as a breakaway gap. So we can make that a breaker. Move that to the right. Cool. That's offering us an entry. And then we also have a breakaway gap right here, which is nice to see. So we can make that blue, and I'll put breakaway gap. So once we trade higher, we create a fair value gap. This is classic ICT model, our 2022 model. A breaker market structure. Where's the breaking market structure? This swing high, pretty much. As soon as that gets broken, we expect a fair value gap to form. Now, where would you put your stop loss? Well, I'd probably put it below this low if I'm entering up here, and then I'd cast up 1 for my target. So let me put fair value gap. Fair value gap, so I usually like to make orange. I'll put FVG. And again, look at how price is respecting even the quarter level. So when price respects the quarter level, that shows a lot more bullishness than just the 50% level. And that's something you have to just see in price action yourself. I'll just show you now. So we have a quarter level there. I'll just give you that. And look how we respect that quarter level. which makes that an ideal entry. And then again opens its hand for bullishness, and you can see we expand higher and start running where? To this stop up here, I believe. Yes, we do. Now this is the midnight candle. You can see we trade right up, grab those stops, and then continue lower. Now this is a Monday, so this probably wouldn't be a day I'd be trading anyway, but it's still interesting to look at price action, because remember, it's all it all just repeats itself in different ways. And when you realize that, you know, your ability to read price action increases significantly. So let's cast this up, and you can see I cast it 1 and 2. 2 is pretty much our target, which we hit. 1 is where I'd like to probably get out of position, because it does start to consolidate around there. But let's look at how price delivers in general. So we trade up, we come down, we find support. Where we find support, I don't know why we find support there. Then you can see we trade back down into this order block, and then we expand higher again. And price is just constantly stacking on itself, which is nice to see. Look at that. Another fair value gap here. Until we have a break in market structure where we pull back on a much bigger basis, tap into this fair value gap, 50% of it to be precise, I believe. Now, why am I not using up here? Because this here has been already traded, so now the fair value gap is from here to here. So I want to look at the 50% level of that, and you can see we touched that pip. So that's interesting to see. We then expand higher again, break on market structure. Where? Break on structure here. BOS, let me send that to the right. Break on structure. So what am I anticipating now? Fair value gap entry right here. This is all ICT concepts, guys. We respect it, we do wick into it, where 50% level and a breaker, low, high, lower, low. So this is a breaker and a fair value gap at the same time. So let me make this breaker blue and call that a breaker. Let me make this a fair value gap. And you can see all of these are all confluences, and then we have a breakaway gap below this. So there's all of these things that are coming into play when I'm looking for my ideal setup. So we can put another buy. This will be a beautiful buy in here. And where would I aim for? Probably just this buy side liquidity resting up here if I wanted to scalp. It's more short term buy side liquidity. Put a sell there. That's where I'd get out of my position. As we take out that high, we come back down into this fair value gap. Do we respect the 50% level of it? Pretty much, yes, we do. And then what happens? We continue higher, take out that buy side liquidity resting here. Do we expect to run on stops now? Yes. Where's the run on stops? Breaking market structure here, so that's a run on stops. Come back down into this order block, and then what happens? We continue higher. So this is all just standard, you know, price delivery, order flow. Now I don't like throwing that word around, because I know ICT gets very sensitive about that, as in you don't know what order flow is, and that's fair enough. But the amount of backtesting I've done, you know, you really start to get an idea and grasp of what price is likely to do. And as much, it is interesting though, because as much as I can read it, and I'm good at reading it, I'd like to think I am, yes. It's not, you can read it all you want, but trading it is a whole nother story, you know. So when you realize that and understand that, it makes trading a lot, you realize there's a lot more to it than just understanding. Like, understanding pricing is one thing, trading it is another. So when you understand that, your approach to it becomes a lot more stoic, so to speak, as in you understand that it's not going to be all fun and games the whole time. Anyway, low, high, low, low, break, which means that this wick here is the breaker. Why not this wick, Sean? Well, not this wick, because we want to use the highest closing. Well, it's the highest open, I guess. I mean, we could use the whole wick, but more specifically, I want to look at this. And also, there's an immediate rebalance going on here anyway. So this is also something to take into account. This is technically an entry in itself. I don't know how to explain why, really. But that's an immediate rebalance. Let me just write that out. I'm just going to call it IR. Immediate rebalance. And then we have a breaker. And then we have a breakaway gap as well. Remember, we anticipate gaps getting left open. And then we have another rebalance here at this fair value gap, which is interesting. I'm going to make that yellow just so I know it's still a rebalance. Let me put IR again. I.R. How long have we been going? 15 minutes, not too bad. You see, when I look at the minute chart, I don't get through as much price action as on the 5 minute, and I haven't looked at the 5 minute in a very long time. But looking at, as I said, looking at delivery is so important, guys. Like, yeah. Let's look at this here. You'll notice that I've started to draw out gaps a lot, and I mean wicks, and that's because gaps are wicks too. So I've started treating them like fair value gaps. Anytime I see a wick, I'm like, okay, that's a fair value gap. And I like to see how price treats it. So we have a wick here. We trade through it on the green side, which means that it should act as a bullish fair. If this wick was a fair value gap, then we would have traded through it on the green, which makes it a bullish fair value gap, which means it should then show support. Do we see support here? Yes. Here? Yes. So we want to see that respect of the 50% level. Although it's a wick, it is still a fair value gap. So imagine this was a fair value gap. Would I enter there? Yes. So why can't I enter in this scenario? Well, I can, because I understand that it's a gap too. Very interesting. And then obviously you can see a rebalance happening with this right there. You know, we're trading back into this wick, which is nice to see. And, you know, tips it hands to higher prices, which is exactly what we get. And what we run into, of course, Asia's high. So let me just draw out Asia's high. Buy side liquidity. I'm going to put it on the right, middle, and I'm going to put Asia high. So as soon as it hits that Asian range high, that's where I'd get out of my position. So let's put a sell just above there, and then you can see we consolidate around that high until we eventually leave it completely. Now let's mark out the 7 a.m. candle. One thing that I've definitely learned recently as well, more so, I've started looking more so into the 8:30 candles and 9:30. And as much as ICT has taught it before, only now have I really started, you know, appreciating that time of day for setups. So yeah, it's quite interesting. So we hit that, and then we start to consolidate. We hit the we then enter the New York session at 7 a.m. We start to move lower. To be honest, I wouldn't be convinced that we've broken lower until I see this swing lower get taken, because this is the last significant swing lower I can see. So what I'm going to do is I'm going to drag that out. I'm going to put sell side liquidity. And then once we trade through that, I'd then be convinced, okay, this is likely a break lower. Also, look at these candles. Look at this delivery into that sell side. That's quite interesting. So this is we can see we run down, runs into the sell side, which is what we like to see. We want to see an expansion lower. Do we have a fair value gap? Of course we do. Right here. And we also have an order block here. And we respect the 50% level of it. So I can put bearish order block here, and I can also write out the 50% level to just show how price is respecting 183.723. So we make that red, dashed. And yeah, but yeah, it's interesting that I can see this delivery happening, you know, like as much, because this is a lot of tipper tapper back and forth. I wouldn't really want to trade in this. I'll be looking for this sell side to get taken for me to then have confirmation that we're moving lower. We break that aggressively. We pull back into a fair value gap. We then break lower again. We come one more time back up, tap into that order block. Volume respects that fair value gap, and then we move lower. So I'd like to think that this would be a sell. As soon as we take out that sell side, I'd then be looking for a return, run back into the breaker. We do have a high, a low, a higher high, and then we break lower. So technically, this wick here does act as a breaker, I guess, in itself as well. So I guess this would be the more ideal entry, because I'd look at that like, okay, I want to see price return to that specifically, and we don't get that until here. Which is, you know, a significant amount of time though. It's about 30 minutes later. But that's just something to take note of. So what do we have? We move lower. We have high, low, high, high. We break lower again. Fair value gap. We want to remember we're looking for some kind of fair value gap to get left open. Now that we've taken out the sell side, I want to see a gap left open. We have this gap left open, so we can use that as a breakaway gap. We then move lower. So once we do that, we move lower, and what happens? We take out this sell side liquidity resting below this swing low here. And what do we have after that? We should have some kind of run on stops or return to some kind of premium, so to speak. Premium, short-term premium. And when I say short-term, I mean within this range. So we have a high, a low, and you can see we return back to the 50% level of that. Also, the breaker. High, low, high, high, we break lower. So what am I looking at? I'm looking at this swing low really, aren't I? So I want to draw that out. Do we touch it? Yes, we do. Low of this candle is 548. High of this is 547. So we don't even touch it. That's interesting. Low, high, low, low, high. I'm just looking here. No, sorry, the break would be here. We've got a high, swing low, swing higher, high, break lower. So this would be the breaker. So we do return to it. So rebalance happens there. We like breaker. And we have a breakaway gap, another one forming right there. And this is 50% of this wick. All of these come into confluence. Then we have an immediate rebalance here. So let's say we missed this entry. That moved lower. This candle, soon it trades back up into this. Through that sell, after hitting that sell side liquidity with a bearish bias, we'd want to get in on that immediate rebalance. So let's just write that out. I.R. And I'm making this look easy, guys. It's not easy, otherwise I would be a millionaire by now. We have a breaker here, high. Wow, it's more like a mitigation. High, low, lower, high. Then we break lower. So this would be a mitigation block in itself. So we can make that. Let's make that green for a change, and we'll call that a mitigation. We'll drag that out, and this will be an entry. And look what happens. Look what are we expecting again? 50%. If you start looking at these 50% levels, you would be very, very surprised. Algorithmic delivery. So we move lower. What would I be aiming for? Well, I like the look of these relative equal lows. We've got a low here and this swing low here. So I'd want to see this low get tapped. Does it get tapped? Yes, of course it gets tapped. Of course. So we have this south side. Put south side liquidity. Just put it in the middle. Center. And then I would want to exit my position there. So I can exit my position on this candle, which happens to be on the 830. So what happens at 830? We consolidate. So what happens? We create relative equal highs. So this is all buy side liquidity getting built in right before that 830. We can anticipate this, we're anticipating this to happen. We've got all these relative equal highs, and then 830 hits, we want lower, running through this sell side liquidity, running through this sell side liquidity. So this is a run on stops, isn't it? Sell side, and I'll put run on stops. Right. Center. Let's make this one thicker because this is looking quite interesting. So once we've run out our sell stops, we want to see a breaking market structure. Where's our breaking market structure? As soon as the swing high gets taken out, I'm happy with that. Fair value gap, come down. I want to see this order block act as support. That's what we get. The real breaking market structure is here. But yeah, it does consolidate after that, so I don't want to get too busy into that, too much into that. So what am I doing? There's not really any entries on this though, that's the only thing. But let's just mark out what we can see. technically this would be a breaker, low, high, low, low, that we break with this candle here. So anything within this range I'd want to be looking to buy from. And the stop loss would have to go below here. And then I'd probably get out above this south side, resting there. And then we move higher, heavy consolidation, move one more time, tap one more, run up to this buy side liquidity, and then we have a breaking market structure here, and then we break lower, and then we just consolidate. Now this is very choppy price action, but you can see some very nice moves here. So we have a breaker here, high, low, high, high, break lower, breaking market structure, fill it, we leave the range, immediate rebalance, trade lower, fair value gap, consolidate, break structure again here, and eventually we come back down into, oh, we don't even touch the breaker, but we come back down into this candle high, which is an order block. So yeah guys, that's going to bring us to the end of this episode. I'm going to continue this, so yeah, thanks for watching, and I'll catch you in the next one. Peace.